Rich, I want to begin by asking you on behalf of everyone listening about the current PE market conditions, what it's like, and also what do you see ahead for PE?
Yeah, so thank you, and pleasure to be here. Thanks for giving us a chance to chat with you all today. Um, Private equity has been in some pretty significant transition in the last 2 years. So we came off of a cycle, kind of COVID and post-COVID, where raising was fairly easy. There was a lot of deal activity. Deal activity creates executive opportunities and hiring opportunities. Uh, we saw very fast transitions and the growth of private equity and more funds being active in the marketplace. The last 18 months has been very different. So as interest rates climb, capital got much harder to access. Debt is much more expensive now, and the private equity deal flow activity has fallen off over the last year or so. As a result, there are less opportunities, there are less seats. People that are in those roles are tending to stay in those roles, and there's just been a lot of uncertainty. It's been harder for them to raise significant funds. Some of even the brand name funds have had a challenge gaining access to new capital. We are starting to see a thaw. So the early indicators right now are that deal activity is going to begin to ramp up again soon. We are starting to see more transactions happening. We're starting to see more new fund closings, which is a positive thing in this case. But we think that's going to be a continuing trend. There will always be a need for talent in these organizations, and there will always be a need for there's always going to be a need to deploy the capital that they've already raised. So we think we're looking at a moderate period of growth. We don't think it's going to be crazy right now, but we'll take crazy if it happens.